Hey everybody, welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, as always, we're going to get into the charts. We're not going to cover all the nonsense narratives that are out there or the hype. It is all about the data and charts. And really what we're going to talk about is the markets as they look towards Jerome Powell tomorrow. Again, Jackson Hole meeting going on as we speak. And again, we will get a speech from Jerome Powell tomorrow. In addition, we did get some market data and economic news this morning, which I do want to touch base on. Let's get right to it. All right, so jobless claims came out this morning. Every Thursday, these are numbers that are released. They came in at 235,000. Now, listen, a weekly number like this, it doesn't move markets, but it is something that I pay attention to as an economist and technician. The reason I pay attention is because what I've learned is if you get above 250,000 in jobless claims, you go on alert. And again, these are people filing for unemployment every week. So above 250, you go on alert. If you get above 300, it usually means recession. Today, we came in at 235,000. So listen, that is not a high number yet. But the interesting thing is that last week we had 224,000 filings for unemployment. So it is up 11,000 week over week. It is just something that I'm paying attention to because next week, do we jump into the 240s? Possibly the following week, we go above that 250 level. But right now, again, 235,000, nothing to write home about. Overall, again, like I said, Jackson Hole meeting going on. Jerome Powell will be coming out tomorrow. We're going to get into the charts. All right, so as we get into the stock movers, let's touch base on the S&P futures. Taking a look here, what we have is the S&P futures are trading down. This is the daily chart, but let's flip over to the intraday. You can see that this was yesterday's massive decline, and we did have a great recovery where the S&P closed nearly flat on the day. The NASDAQ did drop about 0.5% on the day because, again, tech stocks remain very, very weak. And remember, tech stocks have been the biggest leaders. And so it makes sense that you're seeing money rotate out of big cap tech and look for other names. And one of the pieces of information that we're going to go over today is looking at where to put some money in this market environment where stocks like Palantir are falling 25% in just 5 or 6 trading days. Now, it had a great bounce off of the lows yesterday, but again, I do worry that that was buy the dippers on the retail side, and it may not be sustainable. So you got to think a little bit more defensively. We know on the technicals of the daily chart of the S&P, we've broken key levels. We also tagged a support level that I'll show you, which is really, really cool. But again, looking at this market, there is warning signs building more and more. And if you're not ready, you're going to get caught on the wrong side, in my humble opinion. All right, back to the charts we go. So again, S&P futures are down this morning. If you look at where we were, so here was the low yesterday and here was the high. We're almost equidistant between that currently. In fact, we're hovering right around the pivot lows from yesterday intraday. So you had your big drop, your big bounce, then the retrace 1, retrace 2, and rally up. And if you look again at where the markets are hovering here in the pre-market, we're basically right at that level. Look again, right here and right there. Now, if we flip over to the daily chart, this is where things get spicy, guys. This is where I absolutely love showcasing how impressive and powerful charting can be when you use trend lines. And we have obviously this trend line, guys. And if you've watched for the last 3 weeks or 2 weeks, you know that I've highlighted this trend line and we've talked about how it is totally price of the S&P is respecting this line. Absolutely. And you see again right here, this was the Meta Microsoft earnings. They were so good. Great earnings. And what happens? The stock market gaps up into that level and sells off for 2 straight days. Then the buy the dippers come out and they start to grind the market up again. Then you get this beautiful doji right at that trend line again. And what happens? We roll over again. Now, look at the low yesterday, and this is where things, again, get so fun for me. So we talked about this yesterday. I literally gave this trend line as a potential support level. Take the low here from May 23rd to the low from June 23rd and drag it through, and what do you get? You get your exact low yesterday. That is amazing. And even after 26 years of trading and using charts, this stuff still blows my mind how, again, charts tag these levels And again, you say, well, how does the market know? I mean, investors individually aren't looking at this chart. I mean, unless you're in the game plan and watching my trading game plan every day. So why do we see the reversal here? For some reason, these trend lines map out human psychology. And for some reason, when you got down to this level, all of a sudden, the buy the dippers out there in the market said, they didn't, not that they looked at this trend line, they just all of a sudden they started to feel like this was the time to buy the dip. And sure enough, markets rallied off of that. Now, the problem is this, guys, and I showed you guys this yesterday, right? 1, 2, 3, and 4. So we have now hit 4 times. Now, the 4th hit is your 50-50. This is very unlikely to break on your 3rd hit. 2nd hit, even more unlikely. And 1st hit, obviously, you never break on your 1st hit. Basically almost never. So the idea is the odds every time you hit are increasing. On the 4th hit, it's a 50-50 chance of breaking this trend line. What does this mean? Well, we didn't break it. But if we come down again, and we talked about this yesterday in this My Trading Game Plan. So you've got the bounce. Now, if we come down again, the problem is on your 5th hit, the odds start to favor a breakdown. And so listen, we don't know when we're going to hit. Will we hit it today? Will we hit it tomorrow? Will we hit it next week, next month? But ultimately, what we do know is when it does hit again, the odds are now favoring a breakdown. It's about a 60-40 chance of a breakdown. And just to break this out and really teach you guys, which is what I love about these trading game plans, is that it's all about teaching. But let's just say we bounce again on the 5th hit. Your 6th hit now has a 70% chance of breaking. All right. So again, understand the mechanics of the charts, and you will literally have a way better financial future. Because you start to understand that everything is based off probability. Okay. And that's, again, what if you start trading off of probability, all of a sudden you become the casino, right? Yeah. You're not going to win every time. I certainly don't win at every trade. I have my fair share of losers, but the kicker is, can I win 70, 75, 80% of the time? And the answer is yes. When you learn how to chart properly, when you have the experience that I do, that I try to pass along to you guys, you really can put those odds heavily in your favor. All right, we got to get going here. Let's continue on our merry way. QQQ, just a thing of beauty. So it looked like the Qs were breaking the parallel yesterday, and lo and behold, we bounced again. 1, 2, 3, 4. But then look at where we're trading today. We're going to be gapping down basically to that trend line, maybe even breaking. Today could be the 5th hit. We might end up breaking. Let's keep an eye on it. Remember, probability now on this hit today would go to approximately 60% chance of breaking this trend line. If you break this trend line, there's a lot of potential downside. Short-term support here would be around 550, 350. There's a gap fill, but really I would expect an overall sell-off down to 531, which would actually be, even from current levels, another $30 drop, or over $30 on the QQQ. The dollar continues to go into sleeper mode. Why is the dollar in sleep mode? Because we're waiting on Jerome Powell, right? So again, waiting on Jerome Powell for us to ultimately get a bias on his view. Are they going to be more likely to cut rates, less likely, how many cuts, all of those type of things. Again, you are in a bear flag formation, so just keep that. But again, just because you're in a bear flag formation, by the way, doesn't mean Jerome Powell is going to be, let's say, dovish, because you could still continue on this and have a rally in the dollar all the way up there. A parallel channel of consolidation, all this tells us, right, is that you're now stuck between 2 lines. And so you come down, you can bounce up again. The only thing we do know is that it's number 1 hit, 2 hits, 3 hits. So if we do come down again, it would be your 4th hit, 50-50 chance of breaking. But again, this is very, very important for you as investors and traders to start looking at things in terms of how many hits, what's the pattern formation, is there a time count there? These are all things that I go over in the Winning Trader series on the dollar. The 10-year yield, classic bear flag, pretty much asleep as well. This bear flag could go as high as this trend line up here, around 4.39, 4.4%, but overall it should resolve itself to the downside. Now, let's talk about Home Depot. Home Depot reported earnings yesterday. The earnings weren't horrible. They were okay. But one thing that struck me, and I'm getting to a point here, even though Home Depot's not moving much today, the point is Home Depot had promised they were not going to pass tariffs along in their last conference call on their last earnings. And then in this conference call yesterday, they said, hey, listen, we're going to have to pass some of these costs along. Okay, so that's important. In addition, we flip over to the chart of a Walmart, and Walmart is down. Now they missed on earnings, but they beat on revenue. Okay, let me say that again. They missed slightly on earnings, they beat on revenue. What does that tell us? What does it tell us here? Okay, if a company like Walmart, a retailer that does get impacted by tariffs, they missed on earnings. So what does that mean? It means prices went up, for them, their wholesale prices because of tariffs, but they missed on earnings because they didn't pass those costs fully along to the consumer. If they did pass it all the way along to the consumer, then earnings would have been equally as high, right? They would have made expectations. The reason they beat on revenue is because people had to pay those higher prices that were passed along. And again, that translated into slightly higher revenue. But again, essentially, Walmart even said they are having to pass some of these tariffs along, which again then increases revenue but hurts earnings because they didn't pass it all along to consumers. But ultimately, my point is that we are slowly seeing the impact of tariffs in the retail sector and really across the board. And that's important because this is information that the Federal Reserve has to look at, right? The Fed, which up until now hasn't really seen a lot of increase in inflation until the PPI last week, is now going to be saying, wait, what did Walmart say? What did Home Depot say? Is this going to be impacting the CPI in the coming months? Does this still allow us to cut rates as aggressively as we otherwise might have done? And that is going to be a hindrance. There's no doubt that now that you basically have these trade deals where tariffs are now set in stone. And now companies are saying, okay, well, I know this is set in stone. Prior, we didn't know, oh, were they going to be delayed again? Are they going to be negotiated to where there's no tariffs? Now it's like it's in stone. Companies, again, they'll stomach some of it. But as I've said, companies, they don't want to pass 15% price hikes across the board. So what do? They say, all right, well, let's pass 3% this quarter or this year. And then next year, we'll slowly shift a little bit more. Let's do it slowly, like shrinkflation, right? Like the idea is, oh, if we shrink the packaging, no worries. It's the same price, but no one will notice. Well, we obviously notice, right? I think we all notice in general. But the idea is that a lot of people don't actually notice. They're like, oh, it's the same price for this can of tuna. Okay, that works, right? Little do they know it's a less 1 ounce or whatever it may be. Okay. In any case, guys, things like that we want to discuss and we want to be aware of. I'm all about transparency, just like we talk about charts and data. We got to look at the data overall. All right. Back to the charts we go. Where is some good areas that are looking interesting? This chart looks very interesting of Campbell's company. This is Campbell's Soup. You can see, again, it's trying to break out. It may have broken out. I love this bull flag right here. It's, again, above this down-sloping trend line. These are names where, again, listen, they're not sexy, they're not flashy, but they've been beaten down. I mean, look at this beatdown that this stock has taken versus, Robinhood or a Palantir or an NVIDIA. And this could be where you go as a defensive trading opportunity. And listen, it's not amazing, right? It's not like, oh, yay, this Campbell's is going to go up 200% like Palantir in 6 months. It's not. But it pays a dividend, and it could be a good place to store money. What I like to say to people is that during recessions, is Campbell's going to be really impacted? I mean, they kind of make these low, soups and this and that. People still have to eat. Right. And in fact, I wasn't going to go into it, but when we get to commodities, and I got to keep an eye on the time here, when we go into commodities, I'll look at wheat and corn, both beaten down. I actually think there's a trade there because in recessions, if the economy slows, people turn to cheaper goods, which is like cornmeal and wheat, right? And people still have to eat. But again, can they make the determination to not buy that latest iPhone as soon as it comes out? They sure can. Right. And I think people are already making those choices and therefore beating down things like corn and wheat as commodities actually, to me, look interesting. All right. Speaking of which, let's get right into the commodities. I don't want to waste. We'll get to crypto in just a minute, but let's go to commodities now. All right, so let's start out with oil and gold and natural gas because those are, as always, the ones we do. But then I did want to touch base on wheat. So here's your oil chart, guys. We know oil, again, has broken down. There's the classic bear flag breakdown. Overall, oil still heading down to this level. This will be the first test for oil, gap fill and pivot area of support. Again, overall, do I think eventually this breaks down? Yes. but in the near term, you may get a small bounce off there. I still think oil's going into the 50s, though, again, because I do believe that the U.S. economy is on a slowing pace. Natural gas, real quick here, folks. Let's take a look at this. Nat gas getting a small bounce. It's still residing below resistance, and it hasn't tagged support. So even if you get a small bounce here, as long as you don't get back above $3, the odds favor a move to $2.63. Okay, next up, let's take a look at gold. And gold had a small bounce yesterday. It's coming in today. But again, this trend line is the key for me, that as long as we remain below this trend line, gold remains in a weak position near term, even though long term and midterm, it is still very, very bullish. All right, so near term weakness, but overall, if you're a long term holder of gold, the chart is amazing. And again, if you zoom out, I did a video on my YouTube yesterday for this and went over long-term cycle projections. And really, the low end of the cycle is $5,000 for this bull market cycle on gold. All right, let's look at silver. Silver, again, becoming more and more of an industrial metal. It obviously has lagged gold tremendously. It is up a little bit today. Resistance remains at 39.80. Support is at 34.65. Now, let's quickly look at wheat here. And again, I always look at the cash contracts here. You can see wheat is actually bouncing nicely off technical support here. But look at the beatdown on wheat. I mean, this is an incredibly cheap chart for something like wheat, a commodity. Now, listen, commodities have a lot of impact from foreign produced wheat, right, at much cheaper prices, and et cetera. But I still go back to the fact that this as a chart is a chart. Doesn't matter if it's corn, if it's wheat, if it's oil, if it's a stock, if it's a crypto. Charts are charts. They're based on overall psychology. And therefore, this to me looks like a move. The key on this is going to be a breakout. You want to see wheat break above 530, and it should get a move. There is an ETV that tracks this. That again, if you don't trade futures, WEAT is the ETV. That's one. And then also corn. Corn is obviously the commodity, but there's also a ETF right here, or ETV as they're called here, and that can be traded for corn as well. But just to show the corn cash contract quickly here, let me go to let's see, which one do we want to look at here? We can look at this one here, corn. You can see same sort of thing. Look at the big drop down recently, and if you zoom out on the chart, it's been beaten down basically almost into double bottom, which again, to me, means decent amount of upside potential. And what I love here, what type of pattern is this, guys? Do you guys see this here? A move up and then consolidation. That looks like a bull flag to me. And I did see some questions on these commodities, even cocoa and coffee out there. And by the way, I do look at the questions, but look at, by the way, this is a short on coffee, excuse me. Look at this move up right into this trend line. You should see a near-term pullback on coffee here if you're a commodities trader. I wish there was more ETFs that track more commodities. I generally focus on the ETFs with you guys, but I wish there was one. I don't believe there's one for coffee. They used to have one, but I'm not aware of one anymore in the US at least. All right, let's get into crypto. We got to look at our crypto charts. All right, into Bitcoin, guys. Bitcoin, after a small bounce yesterday, starting to come in. One thing that I gave you guys, and I gave you guys crystal clear guidance on this. All right, we had the double top and the reversal candle. That was never a good sign. You don't want to see a new all-time high made and then a massive reversal, a red candle that engulfs the previous green candle. That is not the way. If you're going to go higher and higher, that's not a good start, in other words. Then we came down and we had this upsloping trend line. We broke it. We confirmed it. You did get a bounce yesterday. But again, the question I would have is, are you starting to make a preliminary bear flag? And we don't know yet. It's too preliminary. It's only two candles. But again, if this continues to go like this, it starts to favor another leg down. I still think 110 would be your next support area, kind of right in this area right here. You can see this high as well as right there from the July and June high pivots. And if it breaks that, then you're heading down towards 100,000 on Bitcoin. Again, Bitcoin's had a great run. The chart now, like gold, interestingly enough, are both favoring a little downside. Although, again, you could look at it, the midterm on Bitcoin is still bullish, just like the midterm and long-term on gold. So that's good. I'm just to remember, I'm a trader, so don't get your panties in a bunch that I'm talking about near term. Like near term is just near term. Doesn't mean long term. I still love Bitcoin long term. But again, near term is just that. Quickly looking at ETH, guys. ETH was a beauty here. Look at how ETH is stronger here, that it hit this level I gave you guys at around the 40.70 level and got a nice bounce. It needs to hold this level at 40.70 though. If this breaks, you'll have some additional support around 38.80. If that breaks, you start heading down sharply lower into the low 3,000 range. Lastly, quickly, Solana, guys, as we go through here. And again, I can touch base on a couple other cryptos there. But Solana, again, had a good bounce. You're basically same kind of general pattern in the near term as Bitcoin. This wasn't an all-time high on Solana, mind you. But again, same sort of thing where it pierced the previous high and then reversed. And now you got a bounce yesterday and it's coming in. The difference here is that Solana as a bullish, like if you're bullish on Solana, you need it to hold this 170 level. This has to be held, and you want to see price come down and then rally and take out this high here. Again, great upsloping trend line there versus, again, Bitcoin's a little bit different in that if we look at this, it's broken its upsloping trend line, right? And so weirdly enough, Bitcoin looking a little bit weaker than some of the altcoins. And you can even see that with something like a Chainlink, right? Chainlink is near, I mean, listen, Chainlink's not even close to its all-time highs, but it's holding up better in the near term than something like Bitcoin. And by the way, if you look at Bitcoin dominance, this is exactly what we're seeing here, right? Bitcoin dominance has actually broken a parallel, which speaks to other weakness in Bitcoin potentially, or even if Bitcoin just goes sideways, it speaks to an outperformance of altcoins versus Bitcoin. And again, this is very, listen, maybe Bitcoin can recapture this parallel here. But again, look at the parallel from all the way from 2022. Price went up to the high end, pulled back, high end, pulled back, almost high end, low end, high end, back and forth until now when it looks like it might be breaking here or has broken. And again, what Bitcoin dominance does, it doesn't, by the way, Bitcoin dominance doesn't mean that Bitcoin is going to collapse versus altcoins. It just means that altcoins may outperform. So it could mean Bitcoin goes sideways, maybe up a little bit, but altcoins just do better. Now, again, be careful with altcoins. We know, again, there's a lot of risk involved, but maybe there is a catch-up trade in the altcoin market, something to keep an eye on. All right, guys, let's go to my final thoughts. So listen, we've covered a lot today. We have a market that is hanging on by a thread. You saw Palantir yesterday dropping. By the way, I gave you a level yesterday and it ended up rallying. It pierced that level and then rallied and ripped right back up above it. Today, Palantir is showing kind of neutral to a little weakness. But the market, again, to me, yesterday was an opportunity where a lot of buy the dippers saw Palantir. They had wanted to buy it at 180, 190. Now it was at 142, 145. And they said, oh, this is the greatest deal. And they bought in. If we can't hold these gains on something like Palantir, if NVIDIA starts to sell off, and if we see a break on those key trend lines on the S&P and the QQQs, the parallel on the QQQ, that trend line on the S&P, this market does have significant downside in the near term. Now, the one caveat is we're waiting on Jerome Powell tomorrow. Can he save the day or does he punish the markets? What is he going to do? I'm not going to pretend to know, but I will report on it tomorrow, whether it's, again, early in the day or late in the day. I will make sure I fill you guys in and really just look at the price action in the market. Look at the 10-year yield, the dollar, and where the markets go. That will tell you everything you need to know about what he says. Is he hawkish? Is he dovish? How does the market take it? All right. On that note, I got to get going, guys. I got to get to the live day trading room. We had another stellar day yesterday. By the way, the options trades in smart money options, we crushed it yesterday. Stocks, we had winners. Beautiful. We had a short on Palantir, by the way. We covered that. That was a beautiful thing yesterday as well. Commodities, you name it, guys. It has been amazing here at Verified Investing. Do check it out, folks. They are a rock star track records. I love you all. Thank you so much for tuning in, and I'll talk to you soon. Take